Okay, so the first report we're going to look at is called a transaction journal, or it might be called a transaction report in your system. This will show you all the transactions in an investment account, such as when the portfolio manager bought or sold stocks or bonds, any corporate actions that occurred, or any flows. So let's dive in and go to this one. Okay, so here first you actually have an input screen, and I have the data input already, but you would normally type in an account number such as 1234, and then a from date and a to date, and then you would hit search. Oh my goodness, what does this all mean? Okay, so here we're looking at the transactions for account 1234 from March 1st, 2022 to April 30th, 2022. And what are all these columns here? Well, the first one is a transaction ID. So why do you think there are transaction IDs created for each transaction here? Why do you think we have that? Well, in order to refer to a specific transaction, rather than have to describe it, wouldn't it be helpful to have just an ID, a numeric ID, to refer to a specific transaction? Do you think you could ever have two trades in the same stock on the same day where it would be hard to distinguish between the two? Sure you could. So wouldn't having an ID to refer to a certain trade be a good idea? Yep. That's why many systems do that. Okay, so the next columns here are trade date and settle date, and these are important columns. You're going to hear about these a lot. And let's pick a specific transaction to walk through these. Let's pick this purchase of Apple. Okay, so we picked this purchase of Apple. What is the trade and settle date of this purchase? That's right, March 16th and March 18th. So what day do you think you economically own the stock, or this client would economically own the stock? And by economically own, I mean that the client would start earning gains and losses from that date forward. Do you think it would be March 16th or March 18th? Would it be the trade date or settle date? Well, if you said the 16th, you're right. So what you see here is that the portfolio manager bought the stock at $156.98 on the 16th. So if the stock went down to $155 on the 17th, would the client experience a gain or a loss? It went from $156.98 to $155. That's right, they would see an unrealized loss. So then what is this settle date of March 18th? Well, the movement of cash for the purchase of the stock is not immediate. Think about when you deposit a check into a bank account. It usually takes a few days to settle. Well, the same concept here. The shares of stock and the cash that you pay for it don't move or settle until the 18th. So on the back end, you need to have a settlement date. And that's what that represents. Now next we'll go to transaction types, this column. So here the naming of transaction types are different in each system, but I'll go through each of these and so you can get familiar with the types of transactions you will see. So the first one here is a contribution. What do you think that means? That's right, that's when the client contributes money into the account. You can see this is the US dollar, so the client was contributing money into the account. It can also be called inflow or funds in, so it doesn't always have to be called a contribution. The name might be different in your system, but that's what it means in theory, is that the client is contributing money. Now what if the client withdraws money? What do you think that transaction type would be called? Withdrawal is definitely one possibility. Outflow or funds out are other possibilities. Do you see any withdrawals here? Nope, not this few months. There's no withdrawals here, only a contribution. Okay, so the next one here is a purchase. This means that the portfolio manager was buying a stock or a bond. Sometimes this is called a buy in some systems instead of a purchase. And the next one is a sale. So this is when a security like a bond or a stock is sold. And the last one here is a dividend, and that's one type of corporate action. So that's when the stock or a company distributes some of its profits back to shareholders. So here we have a dividend in Stag Industrial, and you can see we bought Stag Industrial for $40. So let's say the price of the stock never changed theoretically, and it was still $40 on March 30th, which is the trade date or the X date of the dividend. Now it's still $40 and you're chugging along and it's just $40, $40. And now a dividend comes out for 12.2 cents. So what happens? Well, you owned a stock that was worth $40 and now you have 12.2 cents. So what's going to happen is that the value of the stock is going to be automatically cut to $39.88. And you're going to but you didn't lose any money because you have a lower valued stock, but you actually have cash in hand instead of the value being in the stock. So the value comes out of the company and into your hand as cash. So the stock value will theoretically drop to 39.88 and you will have the cash in hand. So that's what a dividend is. So let me ask you, do you see any other corporate actions here, like a merger or a spinoff or a tender offer? Look at the transaction types. Nope. The only transactions here are purchase, sale, contribution, and dividend. So I'm starting with the basic ones and we'll move into the other ones later, just to give you an idea of this report. Okay, so the next column is symbol or security identifier. There are many security identifiers out there. So for stocks, many of you will be familiar with stock tickers or symbols like AAPL, which are usually local to the stock exchange they are traded on. But when you trade bonds or you're trading internationally, you will also see identifiers such as known as CUSIPs, CDOLs, ISINs. But for now, just know that there's a few types of identifiers and you'll have to get used to which ones people currently use in your system. But basically, this is a unique identifier to identify a security. The next column is the security description or the name of a stock or description of the bond or the currency. Okay, and next is the price. Now, can you tell me what price was Stag Industrial bought for here? That's right, $40. And how many shares are bought? If you look over here, that's right, 20,000. Okay, so you bought Stag Industrial $40 for 20,000 units. And then you have this thing called transaction costs. So when you buy a stock, you actually have to pay commissions usually to a broker on an exchange, and you may have to pay exchange fees and taxes and other costs. So the transaction costs on the transaction here are $401.50. So how do you get this total net amount of the trade? Let's see. I remember in earlier slides we were showing the formula. So if you take the $40 times the 20,000 units, the format there is not right. There you go. You get $800,000. But that's not the net amount here. What's the difference here? Oh, right, we have to take the transaction costs. So I'm going to add the transaction costs here. There we go, $800,401.50. Now you notice this is negative. Why is it negative, you think? Well, that's because it's a purchase and the cash is leaving from the account to pay for the stock. So this reflects the cash coming in and out the amount. You see here when the client contributed $100 million, it was positive. But when you purchase things, it's negative. And when you sell, why is it positive? Because it's cash coming in. Okay, so let's look at one more transaction here in detail. Here's the contribution. So we said that and I made this the initial, I'm saying in this scenario, this is going to be the first transaction in the account. So going forward, when we look at other screens, you'll see why that's important. I'm making this the initial transaction. On March 15th, the client funded the account or started the account with $100 million. So you see here, there's a price of 1. Now in reality, there's no price when you contribute money. But to fit into a transaction journal, you have to put a price. So you put a price of 1 because that doesn't change the net amount. So it's just 1, and then you put the 100 million in shares, even though it's not really shares. I guess it's units of cash, and then you get the $100 million contribution. Okay, so we'll delve into all the different purchase types and sale types and transaction types in later screens, but hopefully this gives you a taste of what a transaction journal or a transaction report will look like and the fields in it.